This episode is brought to you by Experian Automotive. Experian helps the auto industry turn powerful vehicle, consumer, and credit data into action. From smarter marketing and better credit decisions to fraud protection, vehicle history, and market insights, they can help you move faster and stay ahead of the competition. Learn more at Experian Automotive.
Welcome to this weekend drive edition of Daily Drive for the first week of August 2026. I'm Kellen Walker in Las Vegas. It was a big week for earnings. Ford and Stellantis both reported second quarter results, and the headline numbers didn't tell the whole story on either one. And in Japan, a 7.1 magnitude earthquake that started as a regional disruption has grown into something much bigger for global automakers. Here to break it all down is Michael Martinez, who covers Ford and the UAW for us at Automotive News. Mike, welcome back.
Thanks, Kel.
And Larry Valaquette, who covers Toyota, Mazda, and Subaru for us at Automotive News. Larry Legend, welcome back, sir.
Thank you, Kel. Awesome to be here.
All right, let's start with earnings. Mike, Ford posted a $1.3 billion net loss in the second quarter. The headline number looks ugly, but strip out the one-time charges, and adjusted earnings were actually up 17%. What's the story?
Yeah, the story isn't really the fact they lost $1.3 billion, which is interesting. Yes, just like GM, they continue to lose money on the EV pivot. But I think the biggest story at Ford is sort of the present and the future. They're making a lot of money today with their trucks and SUVs. Their revenue was down. They sold fewer vehicles, but their adjusted earnings were up because they're making more money on the fewer vehicles they are selling. Customers are willing to shell out a little extra for the Raptors and the Tremors and all the fancy Broncos and Mustangs that is Ford's specialty. But the future part is interesting too, because Ford is really, really bullish on its energy business and on its software subscriptions. And honestly, it's not even really a future thing with the software. They have 1.6 million paid subscription customers today. That's up 50% year over year. So they're making real money at that. And then the energy business too. They took what would have been a loss on big empty EV battery plants they didn't need anymore, and they're spinning it into a business to make batteries for energy storage systems that they think will start to generate some money when it comes online in 2028. So they raised their guidance for the second time this year, following what GM did last week. So it seems like while the EV stuff is still a black eye, they're finding a way to move past that.
Now, Ford also raised its full year guidance for the second time to between $10 to $11 billion. Now, Mike, how are investors and analysts actually reading this quarter?
Yeah, they read it really well. The stock has been up. In fact, the stock is up pretty significantly this year, largely because of the Ford Energy news. The investors really like that as a business. Now, we've written this year in the pages of Automotive News how it'll be challenging for Ford to go up against some of the established players in that industry. And there's always sort of a risk when automakers expand beyond the core business. We talked about that last week in relation to General Motors, but Ford thinks they actually have some credibility in this space and they think they can make some money at it. I think the investors too understand the fact that there's some room to grow with Ford in the today, in the present, because they're making a lot of money at trucks and SUVs, and their main truck, they didn't have enough of them for the first half of the year, given the Novelis situation impacting F-150 inventory. So that's only going to get better, which means their profits are likely only going to get better. The market right now is really trained to buy exactly what Ford is selling. So they're in a good position.
Larry, Ford is clearly cutting its losses on EVs and leaning into what's working right now. Does that look like a smart strategy from where you sit, or does it look like it's kicking a problem down the road?
Well, they get some credit for turning what was clearly not Mr. Right into Mr. Right now, right? they they have found a niche where investors appear to be happy with this power business, and it's a good, it's a good secondary use of their battery investments. The thing that is worrisome is it all seems very reactive to me, right? It's these pivots from quarter to quarter. We're gonna change strategy. We're and we've talked about this before. We're gonna throw away the strategy that we laid out 4 years ago because the administration changed and now everything's changed. The problem is that administrations change and everything changes. And so when you move your strategy back and forth because that's what the latest quarter uh, demands to hit your numbers, that gets problematic over time. If you lay out a consistent strategy that is flexible enough to deal with things but still keep you moving forward, that to me is better. This, I mean, like I said, they get credit for turning lemons into lemonade here with their EV investments in this power business, and I hope, I wish them well. They are moving into a very crowded segment. Now they're going up against some real large battery makers globally, and power is a completely different industry. And power storage is a completely different industry, one where they do not have the expertise that other players do. So, all we can do is wish them the best and hope it works out. I would just like to see a little more consistent strategy going forward.
Any other thoughts, Mike?
Well, I just say, yeah, Larry makes a great point in that Ford sort of benefits from the changes the Trump administration's made in terms of regulations, in terms of emissions. It's sort of freeing them to build more Raptors and not be penalized for it. And they were building more EVs under the Biden administration because there were incentives to do so. They were still losing money at it. Now, and it's not just a Ford story. GM, Stellantis, which we're going to talk about shortly, they're able to sort of make hay here, at least for the next 2 years, in this sort of new world order, at least within the United States. We'll see what happens beyond that. But it should be noted, they're not completely abandoning EVs, nor is GM or Stellantis. They have new ones coming that they believe they will eventually be able to make money at, unlike the other ones. So if administrations change, if regulations change again, they may be better set up in 2 or 3 years, as an industry. The Detroit Three may be better set up than they were prior.
Now, Larry, Stellantis swung to a 293 million euro profit in the second quarter, a massive turnaround from the nearly 1.9 billion euro loss a year ago. North America led that rebound. Ram 1500 demand was a big driver, but Europe was still in the red, and higher recall costs ate into margins. CEO Antonio Filosa is standing by the full year targets and a 60 billion euro investment plan through 2030. Do you think this is looking like a sustainable turnaround for Stellantis?
I think it's looking better than it was. Yeah, for certainly. It's still not great. This company that was, 8, 9 years ago was a quote unquote war machine of profits in North America. This global automaker, it just fell. I don't know how else to describe it. It fell flat on its face, and it's picking itself up, which is great to see, and they're heading in the right direction. You want them to be able to. They need to make money in North America. You cannot have losses in North America if you're Stellantis, and expect your global operations to pick that up. So the fact that they focused on Jeep and Ram, which is where they needed to be in the first place, is great. The fact that they're righting their product mistakes from earlier, getting back into the compact crossover space that they should never have left, that's all great. Now, like Mike said with Ford, they are taking advantage of this window when we've eliminated the cap on emissions, all but eliminated it. So they're rolling back out the things that they're famous for: the Hemi V8s, the powerful trucks. We've got the Ram T Rex, the Tyrannosaurus Rex, a very powerful pickup that they're making some hay with, the SRT TRX. But that's almost $103,000 pickup. That's problematic if that's what you're counting on. It's a lesson that they learned with Grand Wagoneer. They need fundamental changes to get people into their dealerships, and they're executing that. But they cannot rely on these very few high profit machines. It's not a virtuous cycle for them long term.
Now, Mike, Stellantis has had a complicated relationship with its workforce through all of this. Does a quarter like this change the dynamic at all for workers, for the UAW, for dealer morale?
Well, what's that they say in sports? Winning cures everything, right? So if you're in Stellantis' position, you need to keep stacking wins. And what's a win? It's having a positive quarter. So they have two in a row now. They need to keep that moving. But it is worth pointing out, you referenced UAW workers, believe their margin for the first half of the year is 1.6%, which is still under the threshold that would give workers profit sharing checks. So they need to do a little bit better. And then the workers will probably feel better about this fledgling turnaround. But the only thing that really stood out to me, Kel, about these earnings was a bit of news before the earnings. And it was that Stellantis is basically selling uh, an adjacent business, a car sharing service, free to move, which is in Europe and the United States. And we've been talking for the past few weeks about how Ford and GM are leaning into these quote unquote adjacencies, right? These non core businesses. Stellantis is taking the opposite tact. They're focusing only on the core, which seems to me exactly what they need to do. These companies, while we often lump them together, needs to be noted, they're in very different spaces right now. And this seems to me like uh, the biggest sign or the most important sign that Filosa is really trying to focus in on selling good cars and trucks and cleaning up the mistakes of the past to make sure that they can continue on this role. So seems to me like a good start.
All right, guys, coming up, we're going to chat about the fallout from this week's earthquake in Japan. That's next on Weekend Drive.
This episode is brought to you by Experian Automotive. In today's auto market, every decision matters, and the businesses winning are the ones powered by better data. That's where Experian Automotive comes in. Experian combines industry-leading vehicle, consumer, and credit data with deep automotive expertise to help dealers, lenders, manufacturers, and industry partners make smarter decisions and move faster. Want to connect with the right shoppers at the right time? Looking to sharpen your marketing, make more confident credit decisions, better understand vehicle history, spot market trends, or strengthen your defenses against fraud? Experian helps make it happen. But it's not just about having a lot of data. It's about knowing what to do with it. Experian's automotive experts understand the challenges facing the industry today and help turn complex information into clear, actionable insights that drive results. Whether you're focused on growing your business, improving efficiency, managing risk, or staying ahead of market shifts, Experian Automotive gives you the intelligence and tools to compete with confidence. Learn more at experianautomotive.com. Experian Automotive, powering smarter decisions across the automotive ecosystem.
Welcome back to Weekend Drive. I'm Kellen Walker with Larry Bellaquette and Michael Martinez. All right, guys, let's talk Japan. So what started Monday as a 7.1 magnitude earthquake in Kyushu has turned into a sprawling production crisis. Now, Larry, what's your read on the situation right now, and should we expect to see effects here in the U.S.?
Eventually, they'll be small back here by the time they reach our shores, and it'll take a couple months. We're going to see some shortages of a couple vehicles that are on our, in our markets. By the time it flattens out, and we may be okay. But it's really interesting. I mean, obviously, Japan is a an active earthquake zone, right? Has been for all of our lives. Uh, so these type of things happen pretty regularly. They're insulated. They've built their economy knowing that these things happen and disruptions happen. The thing to remember is that these automakers and their suppliers run very tight, Toyota production system operations. So it's, you know, built right before it goes onto a vehicle. That vehicle is shipped very quickly. They don't have a lot of room, a lot of slack in their supply lines or in their delivery systems. It's going to be tough for a while. And just like it is after every earthquake, every natural disaster that hits Japan, eventually it'll straighten itself out. Uh, Thankfully, the damage was kind of limited, and there wasn't a tremendous amount of injuries. But it's still scary stuff.
Now, Mike, Ford's not directly in the middle of this one, but North American automakers and suppliers are watching it closely. We've spent all week hearing supplier executives talk about the push towards supply chain resilience and regionalization. Does a situation like this add any urgency to those conversations, or is it just something the industry absorbs and moves on from?
I don't want to minimalize what happened, but in a sense, it is. They'll take this in stride and bounce back. And like Larry said, there'll probably be some minimal disruption. But I just don't know if we'll get to a point where they can just sort of completely not worry about this sort of thing unless you just rip up that playbook and completely pivot from just in time manufacturing, right? Like, I don't know that that's being discussed or seriously thought of in any way. That's the system that has worked for decades, even amid crazy earthquakes and other natural disasters. And yes, in these times, sort of like a traffic backup, right? If the plant stops, then the suppliers behind it have to stop. Even if the plant doesn't stop, the suppliers may be affected and they stop. So then the plant does have to stop. So from either way, it could be difficult. But I don't know that the industry is looking at a brand new way of doing things that would completely make natural disasters irrelevant. I think this is just a thing you have to absorb and sort of mitigate and move on from as fast as possible. Again, not to take every story back to Ford and what I cover, but you look at Novelis, you look at F-150, that they really couldn't get around, right? They had one aluminum supplier in the States. And for this period of time, they had to drastically jack up their costs because they're getting aluminum from outside the United States now. So it's subject to tariffs. So they're not going to continue to do that. They're going to go back to the way things were once this plant reopens and is up to speed. So they found a way around it. All things told, not the worst situation in the world. They wish they had more inventory over this past year, but it is what it is. So again, Larry, I just in time has worked for so long. I don't know that we would move away from it.
No, and it's important to note too. There's a reason whenever one of these natural disasters occurs, everybody wants to come in and say, "Well, we need to diversify our supply chain, so that we can protect against this." The reason that we don't is because of one thing: money. You put two suppliers, you have to tool those two suppliers, building the same thing so that you diversify. You put one in coast A and one in coast B, and you diversify. Yes, you have a lesser chance that both will go down at the same time, so you can keep production running, but your costs go up because you don't get the economies of scale. You don't get the the same purchasing power. You're supporting two workforces instead of one. It's more costly. So these are, frankly, they're just part of doing business in a efficient supply chain. And it, like Mike said, disruptions happen.
So, Larry, remember now, we've saw this happen in the 2011 Japan earthquake, and the industry said it has learned its lesson, but has it?
Uh, to some extent, I think that earthquake and tsunami still, still is in everybody's mind. The thing that automakers were going to do in the wake of that, immediately in the wake of that, is they vowed, we are going to map out, if you remember this, we are going to map out who our suppliers are, right? It's not the tier ones they're worried about, it, even the tier twos. It's the tier threes, the tier fours, and tier fives. If you remember, there was a paint additive plant in Thailand that shut down because of that quake, and suddenly it affected everybody because all these automakers found out they were all getting this paint additive from the same place. It was the additive that gives you the sparkly finish underneath the paint. And it shut down some color lines in different plants all over the world because they figured out, oh yeah, this little company was supplying everybody offhand. And so I think the effort was made to try and map those out. The problem is, your tier one suppliers, tier two suppliers don't necessarily want to share that information. They're not in a position to let go of their own trade secrets, even though the automaker is their largest customer. They don't want the automaker to know what they pay for it, because then the automaker starts leaning on them to cut their prices.
Interesting stuff. Good to know. I'm going to look back now in 2011 and 2012 and see the lack thereof of pearl white vehicles.
Yep.
All right, Mike, Larry, as always, guys, thank you so much for joining me.
Thank you, Kel. Have a good weekend.
Thanks, Kel.
That's all for this weekend drive edition of Daily Drive. Thanks to Automotive News executive producer Jake Neer for his help on today's podcast. You can get the latest news on Ford and Stellantis earnings, the Japan earthquake, and everything happening in the auto industry at autonews.com. We'd love to hear from you. Let us know what you think of the show and the topics we covered today. Send us an email at dailydrive@autonews.com or leave us a voicemail at 313-444-2774. And if you enjoyed the podcast, remember to like, leave a review, and subscribe so you never miss an episode.